Hello and welcome to another video recap of the E-mini S&P 500 for a daytradersjourney.com. This is for January 29th, 2016, and today we're looking at again the E-mini S&P 500 on a 6-range bar chart. So each candle or bar is six ticks tall. And today I only had one trade, so we're only going to be a quick video. You can see here this blue circle meaning that it was a valid setup that worked out and made profit. Let me move this out the way. This green arrow points to where I actually got in, the exact bar I got in. So, and this is a setup for the following reasons, a valid setup for the following reasons. First, the market opened and we have this opening range, gray shaded area. The opening range covers the first 6 minutes of price action. So once price broke above this area, I was looking for possible long or for long trade setups. So, and this was the first time we had a trade setup because price was bouncing off of the volume weighted average of price standard deviation. This is the first standard deviation of the volume weighted average of price, or what's called the VWAP. And this white line is the first one, the yellow line is the second deviation of that, and the black line here is the third. The price, you can see here, these two red bars came down and hit the first standard deviation, and this third bar is a doji bar. You can see it here. It hit the top of this opening range. You can see this little blue line at the top of the opening range, and so basically this area right here is where you had some support, and price started coming up. So we wait for two green bars, consecutive bars that happen to cross right above the VWAP. And this first one did, you can see that here, and the second one did. And that's my setup. Two bars bouncing in or on around the first standard deviation, or the actual VWAP itself, or the second standard deviation. In this example, we have price bouncing off the first standard deviation. And that's the valid setup. So once I had this happen, I look for an entry, and I like to have my stops no more than 2 points. So once this happened, I looked at the bottom of this bar, which was the low was 1898.50. I put a little 2 ticks below that to 1898, and wanted to get in roughly around 1900. And price came down and hit 1900 right about here. So basically, when price pulled back, I entered. I believe I got a little better price than that. I got 99.50. So my stop would have been 97.50, which is right about here, the middle line of this net. These three black lines here is what I call the net. It acts as like support when price is above it. And so I got in here, and once I got in, you can see price finally went up and reached both targets, first and second target. First target is 4 points, second target is 10 points. And with trading with 3 contracts, I get out with 1 contract at 4 points and 2 contracts at 10 points, creating that 4-to-1 4-to-1 reward to risk ratio. So anyway, here's the circled area, which is the setup. And again, I want you to realize that price does not have to bounce right off the white line, because sometimes it'll bounce, right below it. But as long as we have the 2 green bars for taking longs, 2 green bars bouncing back up consecutively above the VWAP, that close above the VWAP. Again, this bar wasn't all the way above the standard deviation of the VWAP. You can see only a little piece of it was, but we have 2 closes above the VWAP, 2 green bars. That's a valid setup, and that got me into here getting long, and that worked out. So the rest of the day, you can see prices kept on going up and up and up, but again, I wasn't too greedy. I was happy to get a full target on the first trade, and that was it for the day. Hope you all have a good weekend. And if you have any questions or comments, please leave them below. I look forward to reviewing them. Thank you.